Everyone loves a good deal, and in property that means this question: should I wait for the prices to drop before I buy? And it's one of the most common questions for us as an agent that we will receive. So on surface it sounds very smart, because by waiting for it to drop by 5 to 10%, that's literally like 10,000, few $100,000 being saved up.
But here's the reality. Trying to time the property market is like trying to catch the absolute lowest point of Bitcoin or stocks, which you know is impossible. So in today's episode, we are going to break down the real truth about timing the market and why waiting can sometimes cost you more, and how to make smarter decisions regardless of where prices are.
So hi everyone, my name is Justin.
And I'm Martin.
So today we are going to help you to make a smarter decision in Singapore than in the real estate market.
And today's topic is a big one. Should you wait for property prices to drop, especially now in 2025 when prices are still near records high and interest rates are starting to ease, where many buyers are sitting on sidelines wondering if a correction is around the corner?
But before we go on with today's topic, if you like such content, please feel free to share, like, subscribe, and let us know what kind of information or content would you like to know in the future as well.
Okay, so let's start with the myth that you must buy at the bottom to make money. Here's the truth. Nobody consistently buys at the lowest point, and not even professional investors are able to do that. Real estate moves in cycles, but unlike stocks, the cycles are much slower and harder to pinpoint. Right? So for the Singapore property market, for example, we haven't really had a very big crash since 2008. And even during COVID, prices, even though they dipped slightly, but after that they rebounded really very quickly. And actually hit new highs. So if you waited in 2020 thinking that prices will crash, you will still be waiting today. So and by today, you'll be paying maybe 20-30% more as compared to back then when you have taken action, right?
So the reality is that if you are trying to time the market, you're trying to think a lot about it, actually it often lead to such condition known as paralysis by analysis. So that's where people start to miss out a lot of opportunity. So why don't property prices crash in Singapore? Here's a few key reasons. Firstly, government policy. We have cooling measures such as TDSR, the 15 months, the ABSD, LTV, loan to value. All these ratios and factors will keep all those speculations in check, so that investors do not over speculate on it, and that will cause the property prices to go up in the smooth manner instead of going sky high suddenly and drop it. Secondly, it will be the limited land supply. So in Singapore, it's very small. Demand always exceeds supply, so especially in prime location. Then third will be the strong fundamentals of Singapore property. So for our economy, our employment, our population growth often remains stable, and that often underpins the property demand. So even global shocks like in 2008 financial crisis or the COVID pandemic era, prices declined very shallow and very short-lived, and we rebounded in a very fast manner.
So if you're waiting for a 20%, 30% kind of crash, you might have to wait for decades, and it might not even come, right? So here's another angle for people who forget. Waiting actually isn't free. Let's say you are looking at a 1.5 million condo today, and you say that you wait 2 years for it to drop 5%. Okay, so the first scenario is, yes, you wait and the prices really drop to maybe 1.4. You save 100k saving, okay? But you forgot to consider a second scenario where prices actually rise 5% instead, and then now it becomes 1.575 and you have to pay 75k more. Meanwhile, if you have bought 2 years earlier, you have already paid down part of your loan, and you already paid your mortgages over the 2 years, and your outstanding loan has already dropped a bit, and possibly you have already rented out this space and already started enjoying rental income, and maybe you have be sitting on a 75k profit today as compared to when you never take any action at all.
And don't forget, even if the prices stay flat, no increase in pricing, interest rate does not remain the same throughout. So 1% in mortgage rise, you also could easily wipe out the 5% discount that you will see in terms of the overall pricing itself. It's a classic example of penny wise but pound foolish. So here's the principle that every seasoned investor should know by now. Time in the market beats timing the market. If you buy a solid property in a good location, hold it for about 8, 10, 15 years, the short-term fluctuation actually become very irrelevant. Think about it, a condo being bought about 1 million in 2010 might worth about 1.8 mil. But if you bought it in like January or December 2010, it actually doesn't matter. What matters is that you got it in and stay in the property as well.
Yeah, correct. Because as long as you don't take action, you don't see any profits, right?
Correct.
And it's especially true in Singapore, where long-term property appreciation is backed by fundamentals in our infrastructure growth, like new MRT lines or our government's target population growth. So people consistently build wealth here. Aren't the ones that bought at the bottom. They are the ones that actually took action, went in, and enjoyed the capital appreciation. So instead of trying to time the market, focus on timing yourself and ask yourself this question. First, can you afford the property comfortably? Is the monthly repayment going to be below 30% of income? In fact, because of the TSR, you can't even overstretch yourself, as max loans can only match 55% of your monthly income, right? So the second question to ask yourself is, do you have a long-term horizon? Property works best if you can hold the property long, and of course, because of our SSD, you also minimally have to hold it for at least 4 years without paying any penalty, right? And thirdly, to ask yourself is the property a good buy? Focus on the fundamentals, things like the location, the developer, the layout, and of course the future growth. If you have any question regarding what are the good qualities in property, you can ask us. We have a tested and proven model for you to buy into the most profitable kind of a property. And if the answers to all these three questions are yes, then the perfect time is probably now. And regardless of where the prices are heading to in the next 12 months, it is best to take action now.
And remember, there's always a reason to wait. In 2019, people will say prices are too high. In 2020, they say COVID will crash the market. In 2022, they say interest rates are too high. So those who waited, still waiting. So should you wait for prices to drop? The honest truth is probably not. What you can do is actually, by the time the market has hit bottom, we could be already on the way back up.
Yep. And actually more important is focus on what you can control. Your finances, your long-term plan, and choosing the right property. Because in real estate, the best time to buy is when you're ready, not when the market is perfect. So it's really based on yourself, not the market.
And that wraps up today's episode. So if you find this episode helpful, feel free to share with people who are still sitting on the fence. My name is Justin.
And I'm Martin. And thanks for listening, and we will catch you in the next one.